What's up everybody, welcome to the Stocks channel. My name is Corey and today we had a bearish green day for whatever that's worth, and we're very close to hitting our downside price targets, but we have a huge catalyst coming tomorrow with CPI data. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 0.23% and we did get very close to hitting our price target at 393 intraday, printing the low at 394.82. So even though we have not hit our price target, we are definitely getting extremely close. And I did give the highest probability chance that we would get there around May 10th, which was today, and obviously we did not get there. I still think SPY is trying to get to that price target, but obviously you can never put too much emphasis on what you think. You still need to follow price action, and right now price action is still trying to close above 398. Now we do have a huge catalyst tomorrow with CPI data, so there could be a huge move before the market even opens. So we could gap down to that price target or we could gap up, so you'll need to be very cautious going in tomorrow morning because it should be a very volatile whipsaw. Now it goes without saying, nothing has changed on this chart. We still have the bearish price action and we still have the strong bear trend, and we still haven't met our downside price target at 393, so we could still go lower. And remember, if we start breaking down below the 390s, we're more than likely going to have an increased probability of capitulation, which means we're going to see SPY down in the 380s and possibly even 370. So 393 is a very critical price target and support level, because if we break below that, the selling will likely pick up. So be very cautious if you see price action below the 390s. Now to the upside, if we do get a bullish open, you're looking for price action to reclaim this support level right around 405 to 406 and then break back above the low here at 410. Given all of this selling, we are still red for 6 weeks in a row, so there is a real possibility of a counter trend rally. So if we start to see bullish price action, don't rule out the possibility we come all the way back up to retest resistance right in the 420s to 430s. Remember, we're getting a lot more bullish if we can start closing back above 428, but there will be a huge bear battle up here right around 435 to 438, and it will be a lot more bullish if we can get above the 440s. So there is a ton of upside resistance that the bulls have to work their way through, and they are going against a very strong downtrend. So there's just no reason to be bullish until we see some type of price action confirmation. We're in a very strong downtrend with bearish price action, so we're not just going straight back into a strong bull market, so there's no reason to have any FOMO to the upside. So continue to respect these upside resistance levels and just be patient and let all of the trades come to you. So watch that resistance on the way to 428 if we do start to get a bounce right around 410 and 416, and our 20 simple moving average will be right around 422. On the NASDAQ 100 triple Qs, we were up 1.21% today, and we did bounce off of that support at 297, but remember, we were getting a little too oversold, so there's still the possibility this was just a dead cat bounce. So anything could happen after CPI data, so if we break below 297, you're looking for that price target down there right around 284.7, and a bullish breakout at this point, we're getting back over 306 and closing back above 318 to about 321. If we can get above the 320s, it will look like a bullish breakout from the recent downtrend, but we still have a macro level bear trend that we need to battle out of as well, which will require price action to start closing above 334 and 347, and there will be a ton of bears waiting at those levels, so you need to be extremely cautious at resistance. Remember, it's a downtrend until it's not, and we're still in a downtrend in the short term as well as in the medium term, so do not be getting bullish without price action confirmation of some type of breakout, and continue to respect that we have an outstanding price target to the downside just below 285. In the Dow Jones, we were down 0.24%, and the Dow Jones did lose that support zone right around 322.6, so it does look like we could be trending down to our next price target at 310 and 308. Remember, the Dow Jones is bearish below 340, and as long as it has the bear trend, you need to be continuing to expect more downside, which means lower highs and lower lows. So even if we bounce from here, you're looking for rejection at resistance right around 323 and 326. And if we break out above 326, we still have strong resistance at 333, and we don't have a bullish breakout until we close above 340. So downside price targets remain down here at 310 and 308 as long as we have the bear trend and the bearish price action, and we will have bearish price action until we close above 340, so there is a lot of work to do for the bulls. So it's a downtrend until it's not. Continue to remain disciplined, and if you're accumulating for the long term, only try to buy at very strong support levels. On the Russell 2000 small caps, we were up 0.03%, so we went absolutely nowhere, and we did close below the lower Bollinger Band yet again, so we're still looking relatively oversold. As you can tell, these Bollinger Bands are expanding, so there's still the possibility we get rejected from resistance at 178 and go close that gap and fill the price target at 165.7. Once we get there, that could be the bottom of this bear market, but we do have the bear trend, so we don't want to try to call bottoms. We want to continue to expect lower highs and lower lows until we get a bullish breakout. And a bullish breakout on IWM is all the way back above 198 and then closing back above 205. And an earlier bullish breakout would be a close just above around 192 to about 194. So there is a lot of work for the bulls to do, and the bears have full control of IWM. So don't get bullish until we see some type of bullish reversal in the price action, or we at least start reversing this bearish trend. So continue to look for downside price targets, and if we do lose support at 165, the next price target will be at 156. On the ARKK ETF, we were flat on the day, going down 0.12%, and we did hit that support zone right around $40, and we did even wick below it, and we are seeing a little bit of a bounce from that level. However, you can see the volume is really starting to pick up now, so there is a real possibility of full-blown capitulation, and everybody in this ETF that still hasn't sold is very likely going to capitulate very soon, and that's exactly what you would expect to see in a strong bear market. So if we do continue to slice through support at 40, the next price target is at 33.7, and remember I told you there is no bottom on this ETF until it gets delisted off the stock market, so please do not try to catch a bottom in this ETF until it gets some type of bullish reversal. At this point, bullish price action would be all the way back above 52 and starting to close above 58, and not any sooner than that because it's such a strong bear market. You don't want to get any assumptions or any bullish bias because it's still a very clear strong downtrend. Also look for resistance right around 47 if we do start to bounce off 40, but right now it does look like we're going to continue to trend lower, riding this lower Bollinger Band until we eventually find out where we're going to see buyers stepping in. On the VIX, we were down just over 5%, and the VIX is still elevated above 30, still in a bull trend, and there's still a real possibility we get that spike to 38 as we could reach full-blown capitulation and try to get down to those lower price targets. However, if we do start to see the VIX getting crushed below 30, that will be bullish for a bounce in the short term, but you're not going to get any bullish confirmation from the VIX until it starts crushing all the way back down below 24. So remain cautious while the VIX is above 24, and definitely remain cautious while it's above 30, because there is a higher percent chance of full-blown capitulation while the VIX is elevated above 30, so remain very cautious and risk off during this period. On Bitcoin, we're currently up about 3% with Bitcoin trading right around 31,000, which is a very critical support zone, and we do have very strong support right around 28,000 and 29,000. Now the bad news is if the Bitcoin bulls cannot hold this support zone, we are more than likely going to see Bitcoin coming all the way back down to $20,000. But this is a very strong support zone, so there's no reason to assume that it has to fail. This is a strong bear trend, and we're clearly seeing capitulation as that waterfall wave of selling is hitting the crypto market. So try not to get overly bullish accumulating at these levels unless you are bullish in the long term. If you're not bullish in the long term, you're waiting for some type of bullish reversal in the price action, which is going to require us getting all the way back above 37,000 and breaking back above 42,000. There is a lot of downward momentum and there's no telling how low we can go, so just remain risk off if you're not a long-term bull that is trying to accumulate for the long term. On NVIDIA stock, we were up 3.81% as we continue to get rejected below 179, and we still have that valid price target down there at 150. At this point, with the strong bear trend in the bearish price action, it does look like we could hit that price target before earnings, which isn't until the last week of May. So remain risk off unless you're bullish for the long term, unless we get back above 210 and close the gap at 230, because at that point we will be looking a lot more bullish. This is a downtrend until it's not, so wait for the bullish confirmation in the price action, or you're looking to accumulate for the long term near the price target at 150. Resistance on the way to the bullish price action breakout at 210 will be right around 179, 184, and 199. On Tesla stock, we were up 1.64% as Tesla continues to trend down towards that target at 762 to retest the lows, and if we break below that support, you're looking for a retest of 700. We have the bear trend and we have the bearish price action, and we're not getting bullish until we can at least get back over 900, and to be safer, wait until we get back over 937. So it's a downtrend until it's not, and we clearly see bearish price action with a strong bear trend. So look at that support below at 762 and 700 with upside resistance at 828 and 856. On Apple stock, we were up 1.61% and we did get back above the support trend line at 154, but we still have bearish price action below all the moving averages and we still have a bear trend. Bullish breakouts at this point are not until we get back above 162 and then 166. And if we can get back above 166, we have strong resistance around 168, and above that, we will be looking a lot more bullish. So we're getting a lot more bullish above 162 and 166, but we still have a bear trend, so you need to look at downside price targets, which are down here at 150 and 147. If we start breaking back above 156, that will be looking a little more bullish in the short term, but we still have very strong resistance up here at 162, so don't get bullish until we see some type of reversal. On the financial sector, we were down 0.88% as we continue to see the bear trend picking up momentum and the price action continuing to close at new 52-week lows. On the industrials, we were down 0.65% and we still have bearish price action and the strong bear trend, so continue to stay risk off in industrials. The healthcare sector was up 0.36% today and did get the confirmed bear trend, so we still have bearish momentum with bearish price action, so don't get bullish in the healthcare sector just yet. On the energy sector, we were up 0.91%, getting rejected around that resistance zone at 78, so it does mean if we continue to get rejected from resistance that we could see the next leg lower and finally see a correction in the energy sector. So jumping back over to the S&P 500, while we have not yet met the downside price target at 393, we did get very close today, and we do have a huge catalyst tomorrow with CPI data. If you don't like trading volatility, just sit on the sidelines and wait till we see something develop to the long side. Otherwise, continue to expect more downside until we see a bullish breakout. Remember, it's a downtrend until it's not, so don't get overly bullish until we see some type of bullish confirmation with price action or some type of reversal in the bear trend. Also, don't forget that I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. If you want to find out more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.